What is good, you guys? Let me know if you can hear me. Lit, lit. All right, cool. We'll give it a couple more seconds and we'll get started. So on the last webinar, we went over time frame correlation and how we can use that to our advantage to be able to pinpoint very tight entries. So what we're going to do today is truly break down the concepts of supply and demand, how they operate, also price action structure, and what other people potentially call order blocks. All right, so let's go ahead and jump into it. Oh yeah, thank you guys, everybody who's already in here. I appreciate it. So let's get to these charts. All right, so let's do. All right, so here I have up AUD/USD. And the first concept I want you guys to understand, especially with like looking for zones, understanding, where price is headed next. Number one is going to be, where did it come from? Okay. So I want you guys to actually answer this question. If I'm looking to catch a buy on the H4 time frame, right? But price just hit a daily resistance zone, right? So a zone at the top. So I'm looking for H4 buys, but daily already bounced off of a resistance level here. Who do you think is going to win? The daily sellers or the H4 buyers? Who do you guys think is going to win? Exactly. So it's obviously going to be the daily sellers. So that's one of the biggest concepts we have to understand as we're trading these markets. Now, the first thing I want to go over are the higher time frames, because if you look at the daily chart right now, it is kind of in this area of a lot of congestion. So what I want to show you guys is how to understand congestion, or you can call it consolidation, but also a lot of people call these order blocks. Now, basically what order blocks are is when price is in equilibrium. Okay, so let's say we have a high, we pull back to a higher low, we pull up to a high, and then we get this little like stumbling sideways, right? Now, most people call it just consolidation. But what this means, what does consolidation actually mean? It means that buyers and sellers finally met at a price where they agree upon, and all of the orders are just being put in. Okay, so basically, if, for an example, let's say the price, for an example, how it is right now, 77,543, right? So let's say at this point, the market starts consolidating. This means that there's enough buyers and sellers to keep the market where it's at and continue trading in this tight range. But what happens when you get a huge spike either way? That means that the market is no longer in equilibrium. Okay. So now when price pushes away, excuse me, when price pushes away from these levels, for an example, let's say this push from this low to this high, what happened? What truly happened in that market? Now, if you truly analyze it, it means that the market got out of balance, right? Because it was balanced when it was consolidated. It was enough buyers and sellers to keep the market where it was at. But as soon as we got this huge breakout, that means that the buyers took over. So that means at this moment, there was more demand than there was supply, okay? So the market flew up. Now, when the market shoots up and it's no longer in balance, it's no longer in equilibrium, what happens? Okay, so you can think of this like anything else in the world. Think about even your body, right? So when your body feels balanced, you're in a good mood. You feel, perfect. You can do what you got to do. But what happens when it gets out of whack? When it gets out of equilibrium? It's unbalanced, and you're trying to figure out how to get back to balance because you want to feel normal or whatever, right? It's the same thing in the markets. So when the market shoots from a level of equilibrium or balance, it's going to try to get back to another level that has the same thing, equilibrium, etc. So what I'm going to show you guys right now is basically how that works in the market, okay? Now, here are some examples of what I mean by, those areas of consolidation or equilibrium. All right, so for an example, let's check out this area here. Okay, so when price was in this area, there was enough buyers and sellers to just keep bouncing around in this area, right? So what happens when price finally breaks out to the top? It's going to pull back to that previous level of equilibrium to pick up orders and then continue. Okay, so the market's going to do this over and over and over again. Now, when we drop to the lower time frames, this is going to be a key component in how you can keep from getting faked out in the markets. All right, so we already know from, the last webinars, if we're trading in a, daily range, so let's say we draw our zones on this time frame right now, we're looking for price to leave one daily support, go to a resistance, and vice versa. So let's go ahead and mark up our charts as we normally would. So I would trap price, we have exhaustion up here on the daily time frame. And then we also have exhaustion down here. But I want to ask you guys, why do you think this exhaustion here was created? Okay, now let's look to the left. Now this down here was a point in the market where buyers and sellers agreed on a certain price and just continued trading in that range, right? So it was equilibrium. Now, what happened when price pushed away from it? We took off. The market made new highs, right? So if the market made new highs, that's basically, it means that the market is unbalanced at this point. There's way more demand than there is supply, which is why the market's shooting up. So when the market comes back to a potential level that caused the market to take off to a new high, you're more likely to get a strong reversal from that level, okay? So this is a way that we can understand what zones, for an example, are going to be strongest, what is gonna push the price, the hardest in the opposite direction. Now, as we can see here, if we highlighted from this point to this point down here, and we drew it across, and I'm just going to delete this zone for right now, just so we can see the wicks clear. But as you can see, if we highlighted this consolidation area and we drew it to the right, we can now see exactly why price stopped where it did. Now, usually I draw my zones off of wicks only, but what I'm trying to show you guys is when price comes into these areas of equilibrium, consolidation, order blocks, whatever you want to call it, you have to trap price inside of that consolidation area. Now, versus an area like this up here, which did not move sideways at all, it just went up and down, you literally only trap the wicks, okay? So, nonetheless, price pushes down to demand, we get a strong rejection from demand. All right, so if we drop down to the lower time frames, like the 1 minute time frame, all right, there we go. So we had basically two taps to this level. We had one right here, which was way more aggressive. But nonetheless, what happens when we hit this level? Now, my zone isn't as accurate as it should, but this definitely wicked that area. Now, what I'm going to do is start watching levels of resistance and support, okay? So we have a level of resistance here. We made this doji candle, which rejected something and went back down. So now we broke a level of resistance. We made a new ceiling, right? We had a pullback. We closed above the ceiling, and now we're using it as support. So we got a break here, a retest here, pullback, and then an engulfing candle that closed above resistance. Okay, so this is telling us and indicating to us that the 1 minute time frame has transitioned. Okay, so it's transitioning upwards. It wants to go bullish from this moment. Okay, now question for you guys: if price on this bearish drop had put in a lower high here and then drop down here, would we be looking to buy it here? Jonathan, so your question, so the more consolidation in the zone, the stronger it is. Not exactly. I'll break it down a little bit more, but I just kind of want to give you guys a brief understanding of the concept, and then we'll dive deeper into it. Now, the point I was trying to make here is that the only reason that we're going to see a huge push away from this level, number one, is because it's a higher time frame zone down here, this daily demand zone. And then when it starts pushing up, if you look to the left, we have nothing but a breakout range here. Okay, so the first place, remember, supply and demand is on every time frame. So the first place that we could look for potential supply on this chart to reverse price would be up here. Okay, so that would be the first place that I would be looking for price to reverse from. So if I took an entry from this level here, for example, because we got a break, retest, and an engulfing, and I put my my stop loss under structure, so 20 pip stop loss because we're on AUD USD. My first potential level that I'd be looking to see price struggle at is 24 pips away. Okay. So let's go ahead and actually mark this off as if we took this actual entry. Now, remember also, I do like seeing, breaks of trend lines and all that kind of stuff. But when you're coming from higher time frame zones, like the daily and all that, sometimes you're not going to have enough time to get, a full reversal pattern and, all that stuff. So sometimes you're going to have to watch for that first, structure break, and you're going to have to take the trade. Okay, and you guys can back test this as well. But nonetheless, from that entry point, look what price does. Okay, so we shoot up, right? So this was that wick that we got in on here. Price shoots up in that same, well, I'll say like the next candle, all the way up for about 60, 65 pips. Okay, so already we're up, almost what is that? 2.2 risk to reward. Okay, now the same thing happens on every time frame, right? So look at this area. Okay, let's check that area out now on the H4 time frame. Now, what does this area show us here? This area is showing us that this was a lower high point, or I won't say a lower high, but you can say a continuation of the bearish momentum, right? But basically, price stopped here, rejected from support, found resistance, and then continued. Okay, so all in all, this is a consolidation area. It doesn't look like it per se on the H4, but as we just saw on the H1, there's a trading range, right, that price is maintaining in this area. So if we just left a higher time frame level of demand, when we bounce from that level, we're looking for supply levels strong enough to reverse price, right? This is a level that was strong enough to reverse price. So if I was looking to take a trade from down here, overall, I'm looking to take profits potentially at the next level of, a supply level strong enough, okay? Now, this goes directly into, how I trade structure and all that usually, but I'm just trying to get you guys to understand, these concepts a little clearer of why price moves sideways. Okay, so just like I explained earlier, when price is in equilibrium, so in an area like this, right, it's balanced because there's enough buyers and sellers to keep price there. Everything is fine. But once price pushes away from it, right, it's going to start looking for equilibrium again, whether it's going to be a demand level or it's going to be a supply level. All right, so we bounced off demand, we headed up to supply. This is the last area we had equilibrium in, which means this is the last area before sellers took over to drive the price down that we had enough buyers, right? So if I'm looking for a potential area to take profits or to see the market potentially, reject, it would be here. Okay. Now, overall, when we're leaving areas like this, okay, when we're trading at daily levels, for an example, we just we just went over who's stronger, H4 traders or daily traders, right? It's obviously daily traders. So why do you see price overall reject and break structure here and swing up on this time frame? The reason behind that is because we're leaving a higher time frame demand zone. Okay, so the point I wanted to make with that is once we tap this zone, right? So we tapped it once here, and we also tapped it another time here. Once we hit that zone, would I be looking now to short off of the H4 time frame? Okay, so I don't know if this is lagging a little bit, but the answer would be no in this case, okay? So if price bounced off of a daily level already and started pushing up to an H4 zone, I would not want to sell it from this level because that means that I am potentially trading against the overall flow of the market, okay? So this is how you're going to understand what zones are high probabilities and what aren't, okay? You want to get in where there was equilibrium, okay? A retest of it, I'll say, okay? So a place where the market stopped, found enough buyers and sellers, and then continues, okay? So when price comes back to that level, we can potentially expect price to do something similar. But once we hit a higher time frame zone, if we hit a daily zone, H4 zones no longer will support the overall momentum, I'll say, okay? So we were taking sales here. We broke price action structure. And what do you think is going to happen next? We're going to start seeing bullish momentum. We're going to start taking buys here. Okay, so now, once we break an H4 level, yes, we want to start looking for buys, but where are we going to start looking for these buys at? Now, we still have this area up here, right? That we determined was a supply area that was enough buyers and sellers, right? So will we be looking to buy after this broke? Will we be looking to buy after this bullish candle? No, you wouldn't want to buy into a supply area. Okay, you wouldn't want to buy into resistance. You wouldn't want to buy into a zone. Okay, now the reason I'm drawing this so big is just so you guys can understand this is all consolidation. But nonetheless, even if I drew the zone like this, and once again, we could have taken this sell trade down to this level, but once we hit it and reversed in price action structure here, we no longer want to look for sales. All right, so price pushes up to supply again. So at supply, we would only be looking to sell. But now that we know that the daily time frame has taken over, we no longer want to take sales here. We only want to flow with the flow of the market. So we're going to wait for a pullback on the H4 time frame. Now, once again, we know that this is supply up here. So now we have to figure out where is demand at, okay? Where is the demand that can hold the market up to push us higher? Okay, so now what we can do, since we really don't see any, actual support here, we can see that this is broken resistance, potentially support, but we don't know for sure, that this level would hold. What's keeping price from retesting all the way here? Okay, so now what we want to do is just check different time frames, right? All right, so when we check out, the H8, we see that there was some kind of double bottom here, and there was also like this support level here. If we go to the H1, let's see if we can find more details. All right. So now that we look at, this area with more details, you should start asking yourself, okay, why did price reverse here? Well, if I look to the left, was price in equilibrium here, or was it unbalanced? Were there a lot of like buyers and sellers in the same range that was driving the price in consolidation, or was it big moves up and down? That's what you want to ask yourself. That's what you want to understand at this level. So when I look to the left, if I highlight this area right here, was this a big trading range? Was price busting, like, making new highs or new lows or anything like that? Or was it just kind of trading, sideways? Now, the answer would obviously be it's moving more sideways. Now, of course, this is happening because we hit that higher time frame zone and we wanted to transition, but nonetheless, this is all consolidation. This is an order block. This is, equilibrium in the market. Price was just ranging between here until we decided to push a little bit lower to a demand zone and then reverse. So potentially in the future, that's where I would be looking to take buys from. This is not at a level of demand. This is at supply, okay? Exactly, guys, exactly. So you never want to take a trade from supply, okay? Now, we retest demand, so that's where I would be potentially looking to take a trade, okay? So let me fly back to that level we were at. Yeah, it was this. All right, so what are we looking for at this level? Let me actually go on the 1 minute because that's the time frame I use most. All right, so once we hit this level, what are we looking for to happen? We want to see that transition happen. Okay, so we push up, right? We get the first break here, retest, bullish engulfing, and we push up to a new high. Now, once again, on the other trade we took, do you remember how far we were from supply? We were pretty far from supply, which means that, we had a nice range before we could potentially see price want to reverse. Now, let me check out these questions really quick so I can check for consolidation on lower time frames. Consolidation is on every time frame. This is like the next step in time frame correlation. Okay, so consolidation, like I just said, is when there's an equal amount of buyers and sellers. Okay, because price is just bouncing. When there's an unequal amount, that's when you get the huge pushes in the market. Okay, and then when you drop down to the 1 minute time frame for trade execution, do you set your risk reward from 1 minute time frame daily zone? So when I switch to the 1 minute time frame, usually what I'm doing is, it depends. If I'm on USD pairs, to be safe, I would just do like a 20 pip stop at least. And if I'm on GDPs, you can do like 30 pip. But what you'll see is that a lot of times you don't even need more than 5 to 10 pip stop losses. Now I want you guys to back test this for yourself and see what works for you guys. But you guys can kind of use this as a guideline. All right, so nonetheless, as I was saying, the last trade we took, if you remember, there was like 20 pips or so before there was actual supply. Now, once again, remember, supply or demand is when there's an equal amount of buyers and sellers and it's moving sideways. It only takes 3 candles for this to happen. So you can see here that this was a level of supply. We moved sideways. Okay, price found a level of equilibrium. This is what I mean on every time frame. You can see this happening. Okay, and then up here we have a level of resistance, but I wouldn't particularly call this one supply. Now, why do I say that? Because this was a 2 candle move. This was up and then down. Now, when we look to the left, though, what we can see over here is that this same level created, equilibrium over here. So even this whole area, this was all just a consolidation area right here. All right, so we had equilibrium at that level because price had an equal amount of buyers and sellers before it dropped. Now, why would I not want to sell down here? Number one, because let's say, we're just whatever, looking for sells, right? Once price fell, why would I not want to enter here? So number one is because we're away from the true supply that created this push, okay? And number two, we want to look at how far from the supply area price fell before retracing. Now, for an example, if you were, whatever, scalping or something, and you see supply push down here, if you see it pulling up to this level again, you could potentially think that price would make another low, okay? Now, versus, looking potentially to take a trade from this area, which is away from the actual supply, and it only fell, a little bit. It did not fall very far. That has a higher chance of being broken. All right, so this works on any time frame is what I'm trying to get you guys to understand. All right. For equilibrium, can I use the Kijun for confirmation? I honestly don't know what that is. All right, so nonetheless, for an example, we get the break, retest, follow through to this high here. Now, are we next to supply or demand? Now, as I pointed out, this area right here to our left is a level of supply. Even though, it doesn't look like much, the fact that it moves sideways is telling us that this is a supply area. All right, so how can I potentially know if price is going to push hard from this level once it retests or it won't? Same as the example I just showed you guys. After this area of consolidation or equilibrium, how far did price push from this area? It pushed extremely far from this area. It made a new low in price, right? All right, so that's number one. And then after that, you want to ask yourself, how, what kind of momentum did price push with from this level? Was it, slow, like a whole bunch of little lower highs, or was it just huge candles dropping? And obviously we can see these are just huge candles pushing away. So this would be a level that I would potentially think price would reverse at and potentially push hard from. So I would not be entering a buy on a candle way up here next to supply. I would wait. I would wait for a pullback or simply a break of this supply, okay? Now that we analyze that and how we would have avoided, getting in this high, let's find the area we would actually get in. Okay, so we push down again. We have a little trend line here. So we get our trend line break, we get a retest, then we get a bullish engulfing here. Now, at this level here, were we next to supply? Were we next to supply or demand? All right, so once again, we look to our left from where price is. We do have this level, but once again, this wouldn't count as particular supply for me because it was only a 2 candle reversal. This was just resistance. Okay, so my actual supply level would still be this one here. Now, yes, price tapped it here with a wick, but it never broke through it. Okay, so this would still technically be a valid supply area. So if I take an entry here, I know I have at least until price hits this level here to determine if price wants to break through it or it wants to reverse. Okay, so we took a trade here. And this is what I mean, where you could do your stop losses pretty small. You could put your stop loss under structure here, but let's just say to be safe again, we do the full 20 pip stop loss. Okay, so as you can see, we move back up to this level of supply and we break through it. Okay, so once we break through this level of supply, I want to see, okay, where's the next place that price found, you know, a resistance zone strong enough to reverse it. Okay, so we still had this area right here, but look, we broke through it. Okay, so then I'm looking to the left again. I want to see potentially where can price reject again. So now we're looking once again for supply, areas that were moving sideways. Well, what do you notice here? Once again, price was in equilibrium because it was moving sideways. It was bouncing off the same levels. Buyers and sellers were just continuing to trade with each other. So these are the levels that price will potentially try to retest and reject from. Okay, and as you can see, price falls from that level. All right, so now we can remove these zones here. And once price falls again, what you're going to notice is that we eventually retest, one of these levels to create a higher low, and then we push up. All right, so that means that we now have our transition in our 1 minute structure, because now we broke to a new high, we got a retrace that led to a new high. Okay, so this is how you can analyze the lower time frames, is what I'm trying to get at. Is basically, once you're at a higher time frame zone, like a daily at H4, how do you pinpoint these entries, on the M1 time frame? So this explanation that I just went over is exactly how you can keep yourself, from catching an entry at supply where you have to, catch a retrace, and then, you have to hold it all the way to go back and profit. Instead, you can wait until price is ready to transition. Okay. Now, I'm pretty sure, you guys might have to watch this one, a couple times before you really, really grasp these concepts. All right, let me see. All right, cool. I'm glad you're understanding it better, Jonathan. All right, so we did all that down there in the lower time frames, right? Just to get an entry on the wicks of the H1, on the H4. So now when price takes off on these time frames, we're in so low that we can potentially hit our risk to reward or our take profits within the next H1 or H4 move. All right, so let's move back up to the time frames that we're actually looking to trade the structure off of. Now we know that this right here was a H4 level. It was a break of H4 resistance and returned, and we're using that support. But also this was an H1 and an H4 level of demand. Okay, price was moving sideways, equilibrium, and we broke out of it. Price returned to it, rejected it, and took off. Now, once again, what is this right here? This is once again consolidation or equilibrium. Okay, so what happens when price breaks out of it? We're looking for price to find a new level of supply. Okay, so remember, when price is moving sideways, that indicates consolidation. Okay, where does price retest before rejecting? Supply. Okay, now supply is, now this is the thing, the issue with only looking at the market in support and resistance is that support and resistance is one singular line, horizontal line, right? That's not how the market reacts. The market reacts off of zones. It reacts off a range of price. Okay, so we create this range of price where we're moving sideways. So this is where supply is at. We don't want to buy into supply. Now, this is where most people are getting in the market because they're looking at structure and they're saying, well, we broke up above this support now with this candle. So now either I'll take the trade here or I'll wait until this one closes and then I'll get in because, the market's going to make a new high. Why would it make a new high at a supply level? Okay. Also, we know that price has to retest somewhere to build up enough momentum to break through. So now we once again think about it. Where would price want to pull to before continuing? Well, if we just bounce off supply, we want to bounce off of demand. Okay. Now, in this case, we didn't pull all the way back to demand, which is whatever, but you guys get the concept. Okay. You can still catch this trade. Okay. So let's drop down to like the 15-minute and see, what kind of entry that would have given us. All right. So in this case, honestly, I would not have taken another entry. And that's just being 100% honest because, there wasn't even, or actually, let's see. I think on 5-minute, there actually was a trend line that you could have taken an entry in if you got in late. Yeah, there was. So how I would have played this is I would have had a trend line off point A and point B here. It would have been drawn something like that. What I've been waiting for is a point C to be made, price to bounce off of this level, right? So we already know, let's back up a little bit. So we already know we bounce off of higher time frame demand. We already know we transition on lower time frames. We already know H1 time frame has pushed up to a new level of supply. We're retracing to demand, but we overall know that we're continuing the bullish market flow. We pull back, okay? Now, once again, this is how deep, the concept goes. All we do is pull back to demand and supply levels, okay? So this is an M5 level of demand. Okay, now look exactly where price finds support. It literally wicks the demand and takes off. So if you have the confirmation of price bouncing off of demand, you have the confirmation of a trend line bounce, you have the confirmation of, we can most likely find a bullish engulfing or something like that on the M1 time frame here. We have the confirmation of us bouncing off of the H1 demand level as well. What else do you guys need to see in order to take that trade? You know what I mean? So let's drop to the M1 real quick to see if we can find, a deeper reversal pattern. And let me see. Do you ever let your profit run until next resistance zone, or you set your TP based on pips? I honestly hold trades until, price tells me otherwise. Okay, so let's say we took this buy for an example. If I'm just smashing through supply levels on other time frames, there's no reason for me to exit the trade. You know what I mean? All right, so I'm just gonna delete, or actually let me scoot it over. All right, so when we zoom into this area here, now once again, like this is literally how deep you can go with, supply and demand. But we bounce off the trend line and the demand zone from the M5. We push up. Now, once again, we don't want to buy into supply. Now, if we look at all these areas, this is a supply area. Move sideways, then drop. So we wouldn't want to buy here because it has a potential chance of retracing. We look up here, all this sideways movement. We do not want to buy here. We have a potential of dropping. Okay, so if we highlight this area up to the wick here, this is all like a red zone. This is all like a don't trade zone. Okay, we're waiting for a retrace. Okay, so price falls, boom, where does it fall to? The trend line and demand. Okay, so once again, this right here is all an area of consolidation. Now, in this case, it looks like it bounced off of like this level, but nonetheless, we literally were, what, a 0.3 of a pip away from retesting this exactly. Okay, then we get that bounce here. Now, this was a bullish engulfing variation, 3 candlestick pattern. You could have taken the trade off of that level. Once again, we've already now broken this level of supply, right? Because candles closed above it. So this, not like now when price is here, if you look to the left, this right here, okay, This is the new supply level. All right, so now if I take a buy here, I know price can potentially push up at least to this level. And from there, I can know, okay, if we get a strong rejection, a hard bearish candle, I could potentially see price drop. Okay, but the thing is, remember, price just bounces between levels. So let's work through this again. All right, so we push up, retrace, push up, retrace, push up. Okay, so on this same push, the same leg of structure, we broke above the level of supply. So now I expect a continuation to happen. All right, so let's say we took our entry there again. Once again, look how small the stop losses are. 5 pips to be safe. All right, and we're literally catching, you know, the next legs in structure. All right, so from both of these levels, we got entries with no drawdown. Okay, so once again, like I just explained, if I'm looking, like where would I look for take profits? Number one would be supply, of course, right? So if you're taking, you know, a piece of your trade off, you would want to look at the higher time frame, like the H1, right? So from our first entry, you know, we hit supply on the H1 at 38 pips. So you could have parceled out, you know, part of your order there. Okay, so once you do that, you're letting the rest of your trade run. Now, think about it. Even if you moved your stop loss to break even here, price never came back and took you out. So you're protected by demand. Okay. Now, price takes off here, makes a new high. Now, we break through this level of supply. Now, what is that telling you? If we break through this level of supply and we look to the left, right, and we do see that this is a level, a potential level of supply here. But if we're making now higher lows and higher highs on this time frame, on the H1 time frame, that's telling me that we're now setting up for a higher time frame move. So now what am I going to do? I'm going to go up a time frame. Now, this is also a rule of thumb you want to keep in mind. Yes, this was a supply area here, but once price closes a candle, I would say, you know, let's say, you know, 50% into a zone, I would call it no longer valid, because now price has shown us that the momentum is no longer there for that zone. For an example, here you see how wicked and dropped, wicked and dropped. That's showing you that it's still like price is still respecting that zone. But once we start closing candlesticks into it, that's now telling us that we're potentially going to build up higher lows and momentum to break through this zone now. Okay. Now, like I said, we're now playing for a higher time frame move, right? So let's say, you know, once we ate the zone, right, because we closed above it, or I'm sorry, 50% into it, and then here we closed above it. Now let's look to the left on the H4 time frame. Where's the last place the price found, you know, supply? If we look to the left, boom, okay, this consolidation area. Okay, so this is how the market is moving. Okay, so for an example, my next take profit could potentially be in this area here, which is now, you know, from 87 pips up to about 102 pips, somewhere in that range. Okay. Now, once again, if we leave an overall daily level, we understand that we could potentially ride up to another daily level. Okay. So as I'm taking partials, I'm keeping this in mind that I could potentially swing this all the way to a daily level. Okay, now look at the risk to rewards for these trades so far. So let's just say to these H4 levels, right? This second trade is a 1 to 18.5 risk to reward. This one down here, let me see. I don't think this one's working right. Oh yeah, because we did a bigger stop. But let's say, we did the 5 pip stop or whatever. That's about 1 to 20 risk to reward just on these 2 entries here. So if you're risking like 0.5%, you're making like 10%. So on this one trade, you could have passed, like an FTMO challenge. Okay. And you could have also had another risk-free entry here. All right, so now once we hit this H4 level, what I want to start looking for is my H8 and daily levels of supply. Okay, so now we can see H8 also had a consolidation area here, right, where it moves sideways. And look what happens when price bounces off of these levels, because 3 candles move sideways, price wicks it and drops. Well, now we have to see, okay, where would H8 find demand? Okay, now I'm just going to delete these. Oops. I'm going to delete these for right now, just so we can have a cleaner chart. But overall, once again, usually price will retest what it broke, so we can potentially see, resistance turn into support, which happened and we bounced off of it, or it could want to retest lower, right? Now, in this case, it bounced off of this level, but why? Let's check out H4. Now, when price broke here and moved sideways, what happened? Price found equilibrium. We found buyers and sellers that were content on a certain price. Okay, and we just ranged there for a little while, and then we pushed out. Now, once we pushed out, did price push hard, or did it consolidate more and make a whole bunch of higher lows and higher highs and all that to push up to here? You can obviously see it was a nice clean push. Okay, now what that means is when price comes back to this level, there's a bigger potential of price retracing from it than just breaking through it. Okay, so this is why we got that pullback on the H8 time frame, on the H4 time frame. Okay, so once again, this is a potential level you could have found an entry point on a trade. All right, so once again, sometimes the market won't give you that trend line break or whatever you want to see at the bottom here. Sometimes you're just going to have to take that confidence trade where okay, price made a double bottom, broke with a higher close, bullish engulfing. I know that supply on this level isn't until here at least, where we potentially got some consolidation. Okay, so I know if I enter here, if I enter here, I won't run into much trouble until I get to here. And at that level, I can watch how price forms. And if it starts pulling back against me, I can make the decision to close or whatever I want. But by that time, I'll be up enough pips, for an example, to be able to, have enough time to make a decision. So we're up 6 pips at the lowest, but all in all, we went up about 8 pips with no drawdown. So basically from that point, we see our first level of supply be broken. From that level, I'm now a lot chiller on this entry. Okay, so now price takes off and we run into, some more supply levels, but we just basically smash through them. So now, once again, you just move up in the time frames, right? So now we're looking at price and we want to see, is H1 going to, transition? Is it going to break through its area of supply now, or is it going to maintain and drop? So we can see that price, where we got in, basically went all the way back up almost to supply, right? So we can mark off this area of like resistance or supply, and you can see price basically pulled up to it and then a big bullish candle smashed through it. So this is showing us that there was more buyers at this level than there was sellers. Okay, so there was an imbalance that pushed the market up. Now what we want to see is potentially, does the market want to maintain this level, or does it want to transition back? Okay, so now you can see we're kind of in another little range here. All right, so what we're gonna have to do is just simply be patient and see what price wants to do next at this moment. Okay, also we see that on the 4-hour time frame, we got 1 candle, 2 candle, 3 candles. Price is moving sideways, so this could potentially be another level of consolidation, balance in the market, equilibrium. And once we see that, usually there will be another push that comes after it. So that's going to be something we're going to look for before, finding an entry this week is number one, where is price going to push to? We can see to the left here, this was a level of, balance at one point. And we pushed up and then we reversed. So we have to see now, are we going to make new lows or are we going to hold potentially this support level and, make a higher low here to push up? All right. So is everybody following? Is everybody following this so far? It was good, Malo. It's all good. I appreciate all you guys that, hopped on the webinar. All right. So nonetheless, this is, just me breaking down, how the market is going to actually respond and move off of these levels. Now, you do not have to have your chart looking like that, obviously. But what I'm saying is you want to keep in mind, what price is reacting off of and what overall could potentially win the battle between these levels. Okay. So once again, we had this demand level, but now price made this new level of support here. So we can just mark that off as usual with our, red zone. All right. And then we also did get a bullish and bearish close. So we can mark that off as well. All right. So then when we drop down to our H4 time frame, what we can do is just kind of, fine tune that zone to the wicks. And then, we can also mark off an H4 level. Now, remember, to mark off an H4 level, we need a bearish and bullish push, or we need a bullish and bearish push. Now, this candle has not closed bearish yet, and this one is an indecisive candle. So I can't draw anything off of that one yet. So for now, what I could potentially do is draw my zone off of here. All right, so keep in mind the main reason that I'm not potentially drawing it here yet is because, like I said, price has not rejected this level yet. Even though it is sitting under a previous level of what we can call support and is reacting as resistance, we still have over 3 hours before this candle closes, which means this could pull up to here or it can do, whatever it wants. So it's much better for us to put it here, all right? So overall, this is how I have, my chart marked going into this next week. Next thing I would do is kind of zoom out and see if there's any potential levels that I could see that could influence price. All right, so I do see that we have a trend line here that price reacted off of to make this third tap higher low. Let's back out to the weekly real quick. All right, so here's another example of why, price is acting like it is up here. Look where price found demand on the weekly time frame. All right, so we have price consolidate, push away. So where's price going to retest before it pushes higher? Demand. You know what I mean? Where it was equal at, where there was an equal amount of buyers and sellers. So price pushes up to new highs and it comes back once again to tap this level. All right. Yeah, like I'm telling you, like this stuff, if you really can grasp the concepts of it and understand how price truly moves, I'm telling you guys, like the amount of confidence you'll have on the charts can be crazy. All right, so nonetheless, we bounced off of this level of demand twice. Price only wicked it. We didn't close any candles 50% into it, so it's still a valid level. Like I said, dropping down to the lower time frames. Overall, we had a very, very strong level of demand that pushed us to new highs here. We're in between a leg and structure right now, but this is all just consolidation, I would say, looking to the left. This whole range is just a lot of equilibrium on the higher time frames. So as us trading this particular market condition, we have to just be patient, okay? We want to wait for price to tell us, that it's out of balance. Okay, we don't want to trade in balance because that means consolidation. We want to wait until the market shows us there's far more buyers in the market than sellers. And then what's going to happen? The market's going to try to get back to that level of balance. So it's going to reverse off of a level of supply. All right. So for an example, we can see that in this situation. So on the 8 hour, for an example, we can see the price had pushed up here and then it rejected. Okay, we had a consolidation area and we dropped. Price retested it and then dropped even harder. So we got another level of supply here, and look where price comes back to before it drops. Now, why do you think so far price has done this bearish engulfing drop? Well, if we look back to this level, once again, price fell from it pretty hard. Okay, we fell over 170 pips, and our level of supply was only about 20 pips. Okay, so that's why we got such a nice rejection from this level. Now, once again, in order for me to potentially want to hold this trade, like let's say if we got in here, what I would potentially be looking for is for price to create another level of supply and then drop. You know what I mean? So now I know that overall price can potentially, come back and retest it and then push even lower. Or I want to see price respect, this new potential level of support. And what it'll do is move sideways, build up that balance, and then it's going to push. All right, and when it does that, we'll potentially be looking for a level to retest and take the market up. All right, so as of right now, this is how I have my chart marked up. And like I said, it's always like it's too early to try to, have a real market direction right now. What I would do is wait until closer to New York session tomorrow and, see how the market is reacting. All right, so what, if you guys have any questions, you guys can go ahead and ask those now. If you guys want me to mark up any particular charts, let me know. So a lot of these are, just older markups and whatnot. All right, so here's another example of that demand, right? So we moved sideways here, then we pushed up. So if we just, circle that area, we drop down, we can see, why price reacted there. All right, so there was demand here. Price left it. When it comes back, it's going to react off of that same level and push up. Okay, so now price is trying to decide, once again, is it going to break above this level of previous support and turn it, once again into support, or is it going to reject and push lower? Could I do gold? Yep, I got you guys. GUEU for short. GJ, can I keep this concept using M15 and 5 and M1? If you're scalping, what I would do is maybe use like H1 structure as your higher time frame, and then use like M5 and M1. You think you could look at GJ? Yeah, I got you. So wait for Monday to show market direction. In this case, I would say yes. Like sometimes, the market is clear on Sundays, but I would just say for where we're at currently, I would personally wait for more market direction. And remember, we're kind of in the middle of no man's land real quick. We're not at supply and we're not at demand. We're just in the middle. So we don't really want to trade this market. All right, so let me mark this one up real quick for you guys. So we'll check out the weekly time frame. So as you can see here, we did have this level of demand here on the weekly time frame. All right, so price bounced off of this level, it's pushing back up. All right, so overall we can tighten this up now as a daily zone. All right, and then price pushed up. So overall, I would say my next Well, now since we closed the bearish candle, this would be my daily zone here. All right, so now we have this trading range, right? So we did push off of a higher time frame level, like a weekly level. So when we push off of weekly levels, that potentially makes me think, we could potentially change our trend and go back upwards. Now, obviously, weekly momentum beats daily momentum. Now, that's not to say just buy immediately, because the market still has to create structure, still has to bounce off supply and demand on every time frame, etc. But it's just something I might keep in my mind, as the week progresses. Now, I want to see on lower time frames, are we going to potentially build, higher highs and higher lows, or are we going to, transition back to lower highs and lower lows? So overall, like I said, we have some demand here on the H8. Then on the H4, it was actually, clear, and it was actually a zone. So we can put our H4 level there. All right, and then that would be basically how my zones would be drawn right now. So overall, we are close to the top daily zone. But remember, this level wasn't really supplied. It was just a strong rejection. Could potentially be people taking profits at this previous level here. Now, when we look to the left of where price was, literally this was the only thing that could have dropped price. People taking profits, basically, from this previous low, okay? But when we look at where actual supply is on this chart, the last place that consolidated before dropping hard was this area here, okay? And then this area here. So until price reaches those levels, potentially we may not see like a huge move. Now, if, within tonight's session, like tonight's London session and all that, we get a drop under this level, then that's going to let us know potentially we're going to head back down to this level of demand. All right, but as far as right now, we are maintaining levels of demand. So I would expect price to maintain bullish momentum. DXY, all right, for sure. So, all right, we got AU, we got EU. Let's do GJ real quick. So GJ has just been like a freaking rocket lately. So the first thing I would do for this one is look at the higher time frames, of course, so we can check out like the monthly. Let's zoom out a bit. Yeah, so you can see we're in like a higher time frame move here. Let's go to the weekly. All right, so we can see on the weekly time frame potentially there was some kind of level of demand, or I'm sorry, supply up here, where price kind of ranged for a bit and then dropped, and we could see that price kind of reacted off of that level. Oops, kind of reacted off that level here. So as we're moving closer to that level, I'd potentially like to see on the lower time frames, possible transition to retrace somewhere, because we've just been shooting up like crazy. So price needs to find a place that can basically reverse it. Now, remember, since we're ranging here, for example, as long as price doesn't close like 50% within the zone, it's still pretty accurate. So as we push up to it, what I can do is draw a daily zone now and tighten it up off of these reactions here. And what area is this? April 9th, 2018. So all right, so what we can do is highlight this area, but also since price hasn't even reached this one here, we can also mark off this one first. And if price breaks it, cool. If it doesn't, then this will potentially be a reversal spot. All right, so what we can do is change the color here. And then let's see. All right, and then what you guys can see is look at all of this consolidation here. All right, so this is all is basically telling us is that there was a lot of buying and selling going on here. There was a lot of equilibrium, and then price at this level, sellers took over and smashed the market down. Okay, and look at what price did after we rejected from this level. We literally, sheesh, it's crazy. I mean, just from this that I can show on my chart at this time, we moved almost 1,000 pips from this level of supply. So potentially when we come back to that level, I would expect something similar. So in this case, when I drop to the H4 and there's still like this much consolidation stuff, what I would do is actually, put my zone back to like this level here. And I would be waiting for some kind of reactions within this zone here. Now it could be a tap or it could be within the zone. Once again, you want to wait until the lower time frames actually either transition or they break a trend line and all that kind of stuff before you actually enter. But yeah, this actually looking at it, this could potentially be a nice sell-off trade going into this week. Now, do you guys fully understand why this would be a good level to take? Hey, Jana, thanks for making it. Yeah, so as price fell from this level, it literally fell extremely hard. There was no like playing around. Price did two huge candles before it even started to consolidate, and then it continued dropping. So as we move back to where current price is at, we can see actually we already hit it once, right? So we rejected the bottom of it. Now, like I said, I would not be looking for any buys here. Okay, as an intraday trader, I would not look for any buys there because price can easily, shoot anywhere within this zone and drop extremely hard. So what I would look out for, I don't know if there's any like JPY or GBP news this week, but potentially if there's news, that could be, the last moment that, or the last movement that price needs to shoot up into the zone or shoot above it and then, drop hard. If this zone does get broken, basically all we'd wait for is daily candles to close within at least 50% or more of this. We'd want to see new levels of demand created, and then we'd take the trades from that level of demand. So the pullbacks on the higher low points. So we just we want to continue to keep it simple. But yeah, this market is definitely overbought for sure. There's a huge imbalance right now as far as where price is at because demand on the weekly time frame would be all the way back down here somewhere, and then the last higher low would be here. So yeah, this is a huge imbalance right now. All right, so nonetheless, let me finish trapping price here for you guys. All right, so we have this little level of where price stumbled. So this could potentially be a level where price finds demand to push back up. Overall higher low was here on the daily time frame. So what I would want to do first is highlight this area and then see what it looks like on like the H4 time frame. All right, and we can see that it was actually a level of equilibrium, right? So overall, we could put our daily zone in a place like this because we could potentially see a reaction off of that level. All right, next I'll drop to like the H4 time frame, and what I'll be looking for is overall a zone that could track where price is currently. So overall, we had sideways movement here. We had a bearish candle, bearish candle, and price is currently pushing back up. Now, once I actually got this bearish candle closed, my zone would now be based off of the wicks here. Once again, it's kind of early in the week to, actually, put everything set in stone, but nonetheless, that would be accurate for, my strategy. Now, once again, I would wait until a little bit later, closer to either London session or New York session, to reanalyze the market and, fix any zones that need to be adjusted. But nonetheless, this does look pretty accurate for where price is now. So overall, if we are creating a consolidation area or equilibrium, potentially we could be seeing a big move coming out of it. Now, we also did wick that area of supply. So I would just keep all of those factors in mind moving into this week. And then anything else you can potentially add, like I don't know if there's, trend lines or something like that that you could potentially see price, respect and then break out of, that's always good to add. Jovim, you can still join the giveaway. You just have to do it in the next like 9 hours. Um, yeah, of course, 223. I'm glad you guys are finding value from it. All right, so that would be my GJ markup. Overall, I would definitely only be wanting to take sales in this market. This is crazy bullish, and we just determined that we're sitting at a strong supply area. So yeah, that would be my bias. If it keeps going up, I would not be touching it until we break this area up here. So GJ, we went over AU, EU. Let's hit gold real quick. You're welcome. Who's that? Malachi. All right. So let's go over this. So once again, let's back out to the higher time frames. All right. So overall, if we look to the left, we can see, boom, we bounced off a weekly support. We drop down to a lower time frame. We can now draw a zone here. Yeah, KSMNVT. I do teach my strategy very in depth. Like how I'm teaching you guys right now is, how I teach my students, and they actually get that one-on-one experience with me as well. But yeah, and I definitely work with you until you completely grasp these concepts and are taking the same trades as me without even taking signals or even asking me. Monday is forming weekly wick, so usually I do not look for trades. Yeah, Jana, that is true. Sometimes you can find great trades though. It just all depends. You know what I mean? All right, so we have our daily zone drawn here, and we also can draw a daily zone here. Now, something we want to keep in mind in this market right now is number one, price created a level of demand here because we moved sideways for 3 candles, which is why price came back and wicked it here. Okay, so the first trade on gold that you could potentially have looked for last week was a bounce off of daily demand here. All right, so let's go over that real quick. All right, so once price fell into this level, what you would have wanted to look for is the transition, right? So overall, we see a break here, retest and engulfing, but we look to the left and we see that price. Let me move this a little bit for you guys, but you can see that price moves sideways 3 candles, which means there's some kind of supply there. We do not want to take a buy into supply. Okay, do not buy into supply. All right, so price falls from there. And once again, we're just looking for, a break of a trend line. We get that break, retest, engulfing candlestick here. Oops. So we take the trade there. All right, and then stop loss would be somewhere down here. I don't trade gold, so I'm not too familiar with stop loss size, but you can put it under structure here. And then what you can see happens also is we created a level of demand on the M1 time frame here. Okay, so price moved sideways, we broke out of it, retest, took off. So then price basically came back here to retest that M1 demand. All right, so then price basically comes back a couple more times. but it never breaks it. All right, then price takes off. Now, once we go back to the higher time frames, once again, we want to look for the next potential area that we can find supply that's strong enough to reverse price. So we can see that the last place that price found supply or equilibrium was here. So I know that I have this whole range to trade in between before price potentially could reverse hard on me. All right, we get there, we break through it. I know the next place is potentially here. Price hits it, but maintains the little higher lows, actually closes above this level, so it's no longer accurate. So I know now potentially I'm looking to see price, come up to this level here. And now I would, switch up to the H4 time frame, etc. And you can also see H4 is broken, price action structure back bullish as well. So now we got in way down here, and price is breaking structure now, potentially on the H4 time frame. We made a huge bullish engulfing. It also looks like we're making maybe like an inverted head and shoulders. We broke this trend line here. So we got a break, retest, and engulfing pattern on the daily, or I'm sorry, H8 time frame. So that could potentially, be a nice push as long as we want to maintain that structure. So then next thing I would do is look for, okay, where's supply at on the H8 time frame? So you can see we had, supply here because we moved sideways. So we could potentially see price want to retest somewhere up here. And if we hit that, price potentially can roll over and retrace, or we can just smash through it. Do you have any difficulties with the FTMO rules due to you looking at higher time frames, can't hold trades on the weekend? No, bro. So I honestly don't have any problems because, and this is more for my private students. I'm not going to break it down too much, but there's certain times that you should look for trades on each individual pair. This comes from back testing a lot and understanding how supply and demand works, but you can get into the market literally before price makes its next move from these equilibrium points, or you know what I mean, like these turning points. So a lot of times I'm not in these trades a long time before they take off in my direction. Like I can still trade them as intraday trades, because keep in mind, if my stop losses on USD pairs are only 5 to 10 pips, sometimes 20 or whatever, I can literally catch 40 pips in one day, you know what I mean, or more. Especially if you're catching the momentum of the H4, H8 daily candles and daily levels. They're going to move a lot, quicker than if you're trading in between these levels of supply and demand. Let's see. Took that trade off your trend line break. Very nice, bro. And that's another thing. Like once a trend line breaks, there's usually always a retest. And it's, to me, I usually always wait for the retest because of this right here. Like let's say you took it here and it takes off. A lot of times the retest will be to demand. It won't actually be to where it retested real quick outside of this trend line here. All right. So nonetheless, let me delete this and then I'll actually mark it up how I'd have it now. All right, so overall we have a daily zone there. We could have a daily zone here. And honestly, for this case, what we could even do is kind of have it like drawn off of this same level, since it's retesting the same level. And then we can drop to like the H4. You can see it's pretty accurate still. All right, so overall that would be my zone on the higher time frame, like the daily. Then here, this would be my last H4 zone currently, which I honestly wouldn't expect to be retested at all. I'm just potentially waiting until a new one is created. All right, so that would be my XAU USD markup goal. So like I said, I don't really see price coming all the way down here unless we break structure back down. But potentially what we could see is, push up to here, consolidation, maybe, some kind of zone established here, and then a breakthrough. Or we can just break through, retest the top, and then continue going. So we just have to see what happens with that. All right, let's do GU. All right, so this one actually was already pretty marked up. Let's see. Yeah, I don't even remember marking this up, but I must have done it with a student or something. But all right, let's check out weekly. So overall, we can see that price was consolidated here for a bit, pushed off with demand, pushed up, retraced. It's not really showing us too much there, but if we jump to the daily, what we can see is we had a level of demand here. Now, remember, we did have this level of demand right here as well, right? This whole consolidation area, and we did bounce off of it, but price decided it wanted to come lower. Now, just because it came lower here, you got to remember this is not a break of structure because it's only a one candle pullback. All right, so that's not a break of structure. Price can come all the way back down to this level before actually breaking structure. So it can find demand though at any of these levels. All right, so demand was found here and we got that nice bounce off of it. All right, and then we went up. So we're looking potentially to the left. Where's the next level of supply we can find? And it would be this whole area here. All right, so once we find supply, we know where not to buy. We don't want to buy up in this area because we know it can reverse at any moment. So price falls back to demand. All right, so on H8, you can see that this all is a demand level. Okay, so we had a consolidation area here. All right, price broke it, retested it, pushed off, but it also got respected in the future again here. All right, so basically I just fine-tuned it there. So now we're kind of getting that reversal on the outside of the trend line. So H4 now looks like it's doing a continuation pattern. We had that bullish, bearish, bullish. Looks like it's going to push up, but that kind of gives us a kind of like a support, like it's a new demand level basically because it's moving sideways. So we have equilibrium here at the moment, and then we're going to push away either way, and then we'll potentially come back and retest it for more entries. But overall, that's how I would have this pair marked up currently. Technically, my H4 zone would still be at the same level here off of this wick. It's totally up to you how you want to draw it. You can draw it tighter where, you put it off of this wick here. But like I said, I don't even think, on these USD pairs, price will potentially push all the way back here unless we get, like a strong rejection from, this area here. So I would potentially expect us to even push up to like something to the left. Like, let's see, maybe even this area where like we break upwards, then we retest this demand here, and then we continue up. And since we, like with this push, we've already broken through all this level of supply. So this is going to be more used as like support and resistance where we're just going to bounce off of it, I think. To me, it's not a strong enough level to push us back bearish, especially reversing off of higher time frame levels. All right, so does anybody have questions? Let me see. Yeah, so equilibrium, think about it. All right, so let's say basically all a price chart is showing you the levels that people are agreeing to make trades at, right? So if the market's just bouncing like this, what does that mean? Like, let's say it's bouncing between the price of $1 and $2, and it just keeps bouncing. That means that between $1 and $2, sellers think it's a fair price to sell to or sell at, and then buyers think it's a fair price to buy at. So it just keeps bouncing. Now, what happens when sellers think, or I'm sorry, what do you think happens when there's a group of people that think that $1 or $2 is too high? They're going to try to drive the price lower. So they're not going to be purchasing at $1 to $2. They want to wait until the price drops. So basically, there's going to be an imbalance. There's not going to be enough buyers, and there's going to be a lot of sellers. So the market's going to drop. And then the buyers are going to get in at a better price. They're going to get in at demand. So that's what consolidation is. It's just equilibrium. It's just moving sideways. There's an agreement between two parties, a buyer and a seller, and they're perfectly fine with that price range. Okay, that's all that it is. Once we break out to a higher level or lower level, that's when we break out of equilibrium. And price is going to try to find it again through supply and demand. Let me check out the DXY, bro. All right, so let me just actually clear this chart out. Let's start with the weekly. All right, so number one, I mean, it looks very, very similar to like EUR USD, like the opposite, of course, in like AU. But we have this level of supply here, right? So basically price rejected off of this weekly supply level. We go down to the lower time frames, you can see that there was a daily level of supply here because we consolidated equilibrium. And look what happened after we left that level of equilibrium, a huge drop. And price left rapidly. It did not go slowly. It went very quickly. Okay, so when price reaches that level again, you could potentially expect price to do something very similar, fall very hard from it. Okay, so we close this candlestick here, we wick to the top. Overall, what you can do is either leave your zone like this, which, I mean, DXY, I don't really usually like analyze it too deeply because it likes to overshoot and all that kind of stuff. So for now, we can just leave it like that. And then what we can do is overall highlight, our zone on the bottom here off of support. And those would be basically my two levels for current price. All right, so looking at price, we can see that once we left this zone, we started making these little breaks in support. All right, so we found equilibrium, we would break through it. All right, so what you got to start paying attention to is the retests that are happening and why they're happening. So we have this block of consolidation here, and look where price retests and rejects from. All right, so price is pushing bearish. So now, like I said on the other pairs, is basically the opposite. What I want to see is for price to potentially, it may retrace, and then I would like to see it create another level of resistance and then potentially push lower. Another thing it can do is potentially push up, break this level, and then continue back up to, another level of supply, which could potentially be up here. All right, so it's just going to be a patience game. The thing is, you don't want to really trade in between these levels too much, because if you do, you're going to be you're not going to be taking the most high probability trades. So remember, the levels that start the pushes, so like this supply level that created this low, is going to be stronger than trying to take levels in between the actual legs and structure on. And this goes for any time frame you're trading. So personally, I trade H4 H8 structure, but I enter on like the M1. So for me, H4 and H8 is going to be the most important. But like if you're a scalper, you might drop to H1 and M30, or if you're like a higher swing trader, you might do weekly and daily. So it doesn't matter what time frames you're analyzing on, as long as you have time frame correlation going to your entry time frame. Cool. Things, just trying to understand the lingo and make sure my terms and vision are the same as your words. Yeah, definitely, bro. So yeah, that's basically what I would be looking for. Like I said, right now it is bearish, so my zone on the H4 would basically be where this line is at right here. All right, and yeah, that would be my markup. So like I said, I'm just gonna be basically sitting on my hands for right now and just seeing how the market forms and all that. And then, when I wake up tomorrow, I'll see, how price is forming, anything I need to update to my charts, etc. All right. So, how long has this been going? Let's see. All right. Yeah, we're at about over an hour and a half actually. So I'm gonna go ahead and start wrapping this up. So if you guys have any questions, go ahead and ask them now, and I'll touch on them briefly, and then we'll go ahead and wrap this up. Thank you. I appreciate it. Thank you. Thank you. And guys, make sure if you didn't enter the contest yet, go ahead and enter that as well. I appreciate you guys. Thank you. Like I said, you guys might have to go back and like watch this a couple times to really take it in. There's a lot of concepts that you have to apply together. Now, once again, it's not something that you just want to replace what you're doing already. So it's not like, you're just going to start putting more emphasis on supply and demand and then forget about structure and trend lines and all this. It's like you put all of it together, you know what I mean, to form the perfect places in the market that will create high probability for you guys. Most definitely, Malachi. Malo, yeah, patience is huge. Um, I trade New York session, so I usually wake up at like 4:30 or 5 a.m. So I'll probably, check the charts then, update any zones that I need to update, and yeah. All right, so if there's no more questions, I'll go ahead and wrap this up. So I'll give it, 1 or 2 more minutes, and then we'll close out. But I definitely appreciate you guys hopping on here. I hope you guys learned a lot. We'll do the same thing next week. That's what I'm talking about, 223. All right, guys. So I'm gonna go ahead and wrap it up. Like I said, I appreciate you guys hopping on. We'll do it next week as well. Take notes, watch it back. Share it with somebody. Comment, like, subscribe. Appreciate you guys. See you in the next one.